Hey there, good people. I've got some good technicals to give you guys today. I've been doing research all morning long. I'm excited about what I see in the charts on some of the most popular stocks that I've covered on this page. We're going to be recapping on Disney and Sound briefly, as well as Apple and Tesla. And I'm going to tell you guys what's going on in that BABA chart after we had earnings this morning. You guys see that it's up, and so that's good news. If we take a step back and we look at the overall market by looking at the heat map of the S&P 500, we see a couple stocks that are doing good and a couple stocks that are doing bad. Mostly the market is a green or gray day, which is good, which means that all of our portfolios should be up a little bit. We should be making some money, but there are some outliers. In particular, I see that NVIDIA is standing out to the downside. It's not having as good a day as a lot of other stocks, and so we need to ask ourselves why. I'm going to be covering NVIDIA in the next couple of days, as well as the fact that Amazon continues to be a bullish outlier. It's doing better than the rest of the Magnificent Seven, continuing its uptrend. I'm going to be covering that as well in the next couple of days. Today, I want to take a step back and I want to review a comment that I saw over on Stock Up with Larry Jones. He's a buddy of mine. If you're not familiar with him, go over to Stock Up with Larry Jones and hit subscribe. But he had a comment on one of his videos the other day, and I'm going to read it to you guys. It said, "Sir, what options should I buy? Please help. I lost a lot yesterday." And Stock Up replied, "Maybe you just need to sit still and learn first before you lose more money. Please don't do revenge trading. It will cost you." Guys, one of the messages that he gave in yesterday's video is to slow down. We've just had 6 months of a positive upswing. You might not have experienced it, but at this point, it's time to slow down. If you did have a bunch of wins, be careful that right now we don't overtrade because we're trying to figure out where exactly the market's going to go. We were in an upswing. Now we're in a downswing. Are we going to go back to the upswing, or are we going to go down more? I'm going to get into that in just a little bit. I'm going to compare the bull versus bear reaction to the CPI data that we got. There's some interesting insights there. But what I want to just tell you guys is all of us can do it. The reason why Larry gave that advice is because he's personally experienced it. He's revenge traded after a large loss. And the only thing that follows a large loss when you do revenge trading is a larger loss. And so that's what he's trying to protect people from, as well as myself. Now, the other day I shared with you guys that I took profit on my Apple and Tesla trade. And this morning when I was looking at the price action moving up, it gave me the feeling, I even said it in yesterday's video, I said this might be over trading, which means I'm second guessing my plan. Now, I'm going to give you guys the trigger numbers that I'm using for getting in or out of both of those plays. And I hope that if you guys have followed me, you understand that on any given stock that I give you, I often give you guys a line in the sand that if it falls below, it's time to get out. If it closes above, it's time to get in. I'm going to give those to you for my two favorite stocks to swing trade. That's Apple and Tesla. So I'm going to remind you guys that my bigger range that I'm hoping to participate in is between 174 and 184. And we've had a nice bounce on the CPI data today. So it appears we're going up, but the market hasn't confirmed that yet. But the trigger that I'm using to get in or out of that trade is $179 on Apple. If we're above 179 on Apple, I want to be in the trade. If we're below 179, I want to get out because I think we could go all the way back to 174 or below. And with Tesla, the trade range right now that I've defined is between 239 and 264. And my trigger for getting in or out of Tesla is a move above 245. I want to be in the trade for that bigger move up, but a move beneath 245, I want to get out because I think we can go much lower. That I do run the risk, if I don't stick to my guns, of over trading the market right now. And so I liked what Larry said. Keep a cool head. Don't revenge trade. Calm down, don't over trade. But we're going to go by the charts. And so let's just go deeper into the charts today and let's recap the earnings plays that I recently gave you and what's going on with the charts today. Two that I want to cover because the charts are looking interesting is SoundHound, S-O-U-N, and Disney. I want to do a recap on Disney. So here's what we've got going on with Sound. The bottom line is we are not moving above the $2.40 price range. If this was going to be a continuation move, it would have closed above $2.40 yesterday, which it did not. And so I believe that we're going down. Here is your clear direction on Sound. We're in a descending channel, and I think that the touch that Sound is going to make is going to be down at $1.77. So it's a pretty significant move. I'm not in Sound right now. I allowed myself to get stopped out and I will be watching for a re-entry at $1.77. But on the other side of that coin, right now, if we were to get a large push above $2.40 and a close on the daily candlestick chart, that would also be a buy price for me, and I would get in right there for the run up back to $5. But right now, in my mind, we've got a confirmation that there's still movement to the downside. $1.77, $1.77 is the next strike price for Sound. Now, another very important technical that I want you guys to be watching and thinking about is that we recently hit $5 and we made essentially a double top. Now, I've talked about how to confirm a double top on a trade. The way that you confirm a bearish double top would be a break to the downside beneath the lowest part of the two peaks. So what that price would be is that $1.59 price that I've given you guys before. If we were to get a close beneath $1.59, then that would be a confirmation that Sound is going all the way sub $1. Now, some of you guys are panicking. There's no reason to panic. I called this out that we were going to pull back beneath $2. We're continuing that trend. They had a decent earnings. We got a nice little pop. Now we got to watch those critical levels that I just gave you. AI is not dead. NVIDIA is king of AI, and they're slowing down right now. So we're going to see all of the AI plays slow down, which opens up a massive opportunity, guys. Some of you guys were chasing it when it was up at its tops. Now it's all coming back to its low, and it's all going to be a buy at the right price. And I'm giving you guys the targets. I think that $1.77 for Sound will be the right price. And in the next couple days, I'm going to give you guys the target for NVIDIA. There's a right price for that stock as well. All right, let's get into Disney. Disney's earnings sucked. I did a great overview explaining what's wrong with the company and the obstacles that they faced. Nothing has changed. I'm going to quickly show you guys some charts and review them with you about exactly what might be happening with Disney over the next couple days. The big question at hand, are we going down to the $80 stock price that I predicted, or has Disney already bottomed at $85, $84, $85, and now it's time to load up before this thing takes off to $120 or $160? Well, it's the charts that are going to show us the way, and I think you guys are going to find the charts on Disney very, very interesting. So basically, they moved up on bad earnings. There was a break above a descending resistance line. Now that's a very bullish thing. We had a descending resistance line that technically could have pushed Disney lower, but instead we broke above it with a nice green candle. But now here's what I want you guys to understand. We've done that time and time again, only to go on to make a new low. Before I get into that chart, I just want to point out that we also broke above the 50 MA, which is bullish. Now, where are we headed? Well, we've got a resistance at the 100 MA, which is the $93 price point, and I would say that it's very, very likely that we're going to hit the 100 MA next. That's what I'm watching for. Then after that, it should cool off, and we should backtest the 50 MA again, which would be a bounce around the $88, $89. But here's the chart that I want you guys to get burned into your mind. I want you guys to look at this one the most carefully. We are still making a series of lower highs and lower lows. That's what this chart represents. We have done this before. After Disney looked as if it had hit the bottom, people piled back in only to make a lower high. And so where do I think this could possibly go in the short run? Well, it could go all the way up to $100. So I'm not saying that would happen overnight, but in the short run, if we go on to make another higher low, and this is not the Disney low, and we are going to get to the $80 that I predicted, we could move up from where we just crossed over those critical areas of resistance. We could move all the way up to $100 before we would then bleed all the way back to that $80 touch, which I think is absolutely still on the table. The Disney play is getting very, very interesting. Hopefully those technicals give you guys even more perspective on what to expect with this stock. Let me know in the comments if it makes sense. What are your thoughts? Are you buying, selling, or holding Disney? This is not a recommendation to buy, sell, or hold Disney, but I've been telling you guys I'm interested in the Disney play, and I do believe that the Disney play as well as the Alibaba play are two future 100% 1x stock bangers. All right, we got the good CPI number, and I want to burn through the daily conversation of whether we're in a bull market or a bear market, and let's just go through the reaction to that CPI number. Now, we all knew it was going to be higher than last month's, but it was not as high as many analysts expected, and that was good news. It showed that the market trend is right now disinflation. I want to give you guys a couple reactions from one of the Feds and some other analysts because it does tell a story. Mary Daly, I've quoted her before. She said that the data was expected and that there's more work to do. So she played sort of a tough line. She didn't crack. She basically said this is what we were expecting. Nothing has changed course. Then we've got one of the analysts by the name of Seema Shah. He said that the case is building for the Fed to keep rates unchanged. He basically believes that this was a strong indicator and data point that the Fed should not raise rates in September. And then following up after him, we saw an analyst by the name of Ivan Gruel. He said that we are going to have continued disinflation in the markets and that the Fed absolutely will not hike in September. And then we've got Greg Walensky. He believes that there's no hike in September if the conditions remain as they are today. He believes that we've seen the last hike in this rate cycle. Now here's my big question. The CPI data was good, but how good? Was it good enough right now to carry us all the way back up to resistance? That's yet to be seen. This was a strong reaction to the CPI number, so I'm going to continue to be watching these markets very soberly. All right, that was a very long intro. I'm going to be getting into Alibaba next, but real quick, this is the Stocks with Josh show where I give daily insights into stock and crypto. I do charting, technical analysis, and price predictions for your guys' entertainment and education. Thank you guys for always hitting the like. If you need help trading these turbulent markets, then hit that subscribe and that YouTube all notification bell. Let me take a quick station break for the moomoo investment app. Here in the US, they're offering up to 16 stock and a cash bonus of $50. I particularly like moomoo. I use their earnings calendar every day. I use their stock screener and their 8 conditional order types. It's a way more detailed app than any other app on the retail market. You guys know that I like it. It's available in the US, Canada, and Australia. Right now in Canada, it's only available for pre-registration, which means that you can access the app, you can sign up for a chance at a free gift, and then in the next couple weeks, they're going to give you the opportunity to deposit funds and to begin trading. Right now, that offer is for the US, but click on the link to get all of the details for the offer that's available in your country. It's just available in the US, Australia, and Canada. But the best part of moomoo is that I host a chat group on the app. I call it Stock Josh Fam. Let me just give you a quick overview of how to find us. When you've got your app open, in the top right corner, you're going to see a conversation bubble with 3 dots in it. You click on that. Then you're going to see a list of tabs along the top. You see one called Chat. You can select that. Then you see a search glass where you can then search Stock Josh Fam, all one word. Search that. I should pull up. You can hit and select me, join the family. Once you join, you're only going to see the conversation that exists after you join, not anything that happened before you joined. Get your free stock, get your cash, start investing, and then come find us in the chat group. All right, let me get into some of the backdrop news going on behind Alibaba before earnings. We had a couple bearish news stories that didn't seem to slow Alibaba down one bit, but let me just dive into them real quick. We saw that China July exports plunged their most, 14.5%, which was the biggest decline since February of 2020. So China just had one of the worst exports numbers that it's had in the last 3 years, bringing it all the way back to the same place that it was right before the COVID disaster. This was a terrible data point. And I'm going to give you my conclusion on this news story in just a little while, but let's just take a moment and acknowledge that that was a really, really bad news report. So to see Alibaba climbing over the last couple days is amazing. That's something that we need to stop and think about and ask ourselves, why with these bad news stories is Alibaba and some of the Chinese stocks climbing right now? I'll give you my thoughts on that in just a minute. Then the second bearish news story that we got came with the fact that Biden orders the ban on certain U.S. tech investments in China. Then we saw Janet Yellen just a month ago visit China and say that they're an essential trade partner. Barely 1 month later, the White House says, yeah, they're an essential trade partner, but we don't want you guys investing in their tech companies. The article goes on to say that the Biden order authorizes the U.S. Treasury Secretary to prohibit or restrict U.S. investments in Chinese entities in 3 sectors: semiconductors and microelectronics, quantum information technologies, and certain artificial intelligence systems. So guys, I got 2 takeaways from that news story. 1, the AI Cold War has begun, not just between the US and China, but between the US and the entire world. Whoever wins the AI race is going to be the world leader. It's going to be the world leader in economics in the coming decade. And the takeaway from that is that you just got some clear indication of what type of stocks should be in your portfolio for the next 10 years. It should be some semiconductor stocks, it should be some microelectronics companies, and some quantum information technology companies. Those are the ones that should be in your portfolio, and I'm going to continue to bring you guys AI-driven portfolios in the days ahead. But those are my takeaways from the big news stories surrounding Alibaba before earnings. Now, let's get into the technicals. If we take a step back and look at the larger history of the Alibaba chart, we see that Alibaba has already broken one of the largest downtrends that it had been in for over 24 months, which was the 2020 downtrend descending line of resistance. We've broken that. And for the last 16 months, Alibaba's been moving sideways, largely between $80 and $120. And so we are still moving sideways, and we're right in the middle of that trade range, so it tells us a lot. Recent low was 80, the recent high was 120. Where are we at today? We're right in the middle of it. And the biggest takeaway from that chart you just looked at is that we're in that consolidation, reaccumulation phase, and the longer the base, the higher the move up is going to be in the future. And we are developing a 16-month base for Alibaba's stock price. We're currently on an upward trend line, and I want to point out that my stop loss is set right beneath that trend line. We've got an ascending support line setting my stop loss at $94 on Alibaba. If we take a quick look at the MACD and the RSI, we see that we've already been given a buy signal for Alibaba off of the MACD. We're looking at the monthly chart, which gives us the longest view of this stock that's possible. And the future, the next 12 months, this MACD is telling you that it was a buy in the last couple of months and we should be moving higher. And then we've got the RSI. Well, the RSI shows that we had a touch of the oversold level on the monthly chart, which is rare. Not very often does a stock get beat down so badly that it gets oversold on the monthly chart. It's more common for the daily chart, a little bit less common for the weekly chart, and rare for the monthly chart. And that we're working on a touch of the oversold territory, which absolutely could be interpreted as a second buy signal. But on the monthly chart, we're still in bear territory, telling us that we've yet to take off from this buy signal. And then we've got the RSI weekly. Now on that, we see some nice bullish divergence. We are knocking on bull territory. We're very, very close to breaking over. That's your MACD and your RSI momentum signals. Now let's get into the bad. Is there bad? Yes, guys, when we're looking at charts, they're never just one-sided. If the charts were clearly one-sided, if it was a green, go, 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 buy, buy, buy signal, then this thing would already be taking off. But the charts tell two stories. So what's the bad in the charts? Well, that comes down to two areas of concern. One, guys, this thing trades so very choppy. It's very usual for this thing to drop 3 to 5% for what appears to be no reason at all. And I know some of you guys have experienced that. So you need to be prepared mentally going into it that this is a very, very choppy trade and that you could lose 3%, 4%, 5% within a 24-hour window on no news at all. That's one of the concerns I have with this chart. And we've got three unfilled gaps. We've got 85, 74, and 66 remain to be unfilled gaps, and sometimes gaps get filled. Now, right now, I just want to point out that we've got three levels of resistance above us, which is 105, 108, and 120. And I've showed you guys this chart before when I've covered Alibaba months ago. We had a 2-year decline that ultimately fed us into an inverse head and shoulders. Head and shoulder patterns have a typical 80% success rate, which means that if we were to break above 120 in the coming days, it would be a strong confirmation that this would go all the way back up to $160 or $200. We don't have that confirmation. We're still in the inverse pattern waiting to see how that plays out. And that brings me to my conclusion. I've covered Alibaba for quite a while on this page, for at least a year. Back when this thing hit its absolute low at $58, I called it a buy just 1 week earlier, predicting that it would hit $59. I had my buy order in at $59. A lot of you guys bought in at $59. If you remember that, would you acknowledge that in the chat and let everybody else know that we made that prediction and we caught that move up all the way up back above $100? Now I came out and I recently began to call it a buy when it was around $80 to $83, and we're currently enjoying the run up today to $100. But like I said, this is a very choppy stock. So if you buy, I don't want you to panic if you get a sudden drop on this stock for no apparent reason. Bobbin needs Wall Street to get behind this stock. And from my point of view, Wall Street has not gotten behind Alibaba just yet. Wall Street has preferred other safer investments like the Magnificent Seven. But as those begin to cool off, is it possible that they're going to say, okay, now it's Alibaba's turn? That's what we're watching out for. My prediction for Alibaba, I cannot make it more clear, is that in the next 3 to 6 months, we absolutely will retest that $120 price range, making us a ton of money. And that's where the trade is actually going to become difficult, because right now the move up to 120 seems like it's charting inevitability. But when we get to 120, that's where we're going to have to make some hard decisions whether or not we're going to hold or let it come back all the way back down to $80. We won't know. We have to watch it at that point. I personally will be raising my stop loss to $119 is what I think I'm going to do. But ultimately, we're going to have to wait until we get closer, and I'll let you guys know what the charts say on that day. That's it for today, guys. Thanks again for the likes. Sub if you want to get honest stock and crypto analysis and updates on my personal trades. I've got NVIDIA and AI and crypto videos coming up next over the next couple days. And directly after this video post, I'm going to head over to the moomoo chat and talk with you guys some more there. Peace and blessings. Take care.